Yeah, I think the market reaction really kind of epitomizes the debate and that the central banks have been grappling with throughout this year, which is that you've got this high inflation pressure on the one hand, which showing no signs of abating, but then the growing downside risks to growth on the other. And at this point, markets are still pricing for further, rather aggressive, I think, rate hikes over the near term, but then really the possibility of cuts as we move through into next year. And markets, in the 10-year point, are really questioning whether these hikes will stick. And if we're going to be hiking beyond, where we ultimately see where the neutral rate is, then that's going to be an added headwind. But I do wonder whether, if it's so obvious that this tightening is going to have such a suppressing impact, whether actually those hikes that are being priced in the near term are actually delivered in reality.
Well, that's a really interesting point. And I guess on that note, do you think that we perhaps are nearing the peak of the hiking cycle?
Yes, I think in the UK it's becoming, well, and in the Eurozone as well, it's becoming very obvious. The growth headwinds are really intensifying. And I think today's 50 basis point rate rise really just gets us to the end point even sooner. And that's exactly what we've seen in the markets is, a shuffling of rate hikes, but no, and then a downward reassessment of how high that peak will come. And, we've got the Commonwealth Games in the UK at the moment, and really it's been a race, and the Bank of England really is coming into the final bend, and we wondered whether they'd have a final sprint for the line or whether they'd limp over it. And it looks like it's sprinting towards the finish line and going to be one of the first to reach the end point.
So they could be one of the first to reach the end point. What about in terms of loosening again? If and when do you see the Bank of England actually cutting rates and loosening policy again?
Well, inflation is going to stay uncomfortably, well above their target for a long time to come. And that's going to make uncomfortable reading for the MPC. But perhaps, it will be a case as we move through into next year and inflation has finally peaked. Perhaps a downtrend is going to be one of the factors that they'll be looking for. But certainly economic activity is slowing. The cost of living squeeze has already begun. It looks like it's going to cause prolonged pain. But I think the labor market is key. If we start to see rising unemployment into that slowing growth environment, then that will really kind of, give central bankers confidence that inflation will continue to return to target over the longer run.